Hello traders, welcome to today's Bitcoin update. It's Monday the 12th of August 2024 and yeah, Bitcoin has had a little bit of a pullback over the past couple of days after the real nice bounce that we saw on Thursday. I said Friday a minute ago, but it was Thursday. So yeah, decent little consolidation going on here, decent little drop down that we've had over the weekend. And we're going to cover all the important stuff that you want to be looking at. So to begin here, of course, we know for a start that Bitcoin did get that bounce from the the 365-day rolling VWAP and the 365-day EMA. So these are quite significant moving averages, and the VWAP, of course, being the volume-based one, that did give a strong reaction from Bitcoin a couple of weeks ago. Now, what we also had there was this gap on the weekly time frame. Okay, of course, we came through and we filled the entirety of this impulse candle that was from back in February. That's a long time ago now. That's absolutely crazy that we're still in the same range as we were in February. But yeah, we filled that big impulse candle that took us up above the 69K to new all-time highs. And we came down, took the liquidity beneath that, and also came back to test the ETF day launch highs. So for the highs that we had on that first day of the ETF launch, all the way even further back at the beginning of January. So basically a complete round trip of the really important price action that we've had so far this year. Now, when we had that day, that really bad down day that wrecked a lot of people, there were two things that I really wanted to see as a sign of strength from the market, just to confirm that we're not really looking at this being like mad, like lower, significantly lower price action. Now, the first thing I wanted to see from that was the daily close back within the range, which is what we had. And then second to that, I wanted to see a weekly close back within the range. And we actually had a really nice weekly candle here. Of course, we did go all the way up to essentially fill the gap down that we'd made. Okay, so of course, with last week's candle, we did have this big gap between up here at 63,500. And then, of course, the previous week was ending down there at like 57K. Now that reached all the way back up to the top there, and now we're just left with this little zone here, okay, a few $100 zone that price could come back into and refill. That's the only real like weekly imbalance that we have left on the chart that is above us. From a monthly perspective, okay, the other thing that I would like to see as we go into the end of the month, of course, we're only we're not even halfway through it yet, is if we can get a close on the monthly back above 60K, ideally 60,500, that would take us back into the value area low of the range. That would take us back into the value area of the range, sorry. And it would also take us back into this monthly structure that we have, where we have these consistent candle closes that are essentially within that March candle. Okay, we've seen wicks above, well, we haven't seen wicks above, we've seen wicks below, but always that close back above that $60,500 to $61,000 level. And that also gives us those consistent monthly closes above our previous all-time highs back in 2021. So overall, on the higher time frames, things are still looking good. I do consider this to be one of these broadening wedges, which you would then set a target as almost a measured move to see significantly higher as you go into the rest of the year here. So when you're looking at these measured moves, okay, essentially looking at this as a bit of a bull flag, I consider this cycle to have started in mid-October. So I'm drawing this as a little bull flag. I know it's very, very newbie, but that does give you these targets above 100K, and I'm still very confident that we are going to see those prices above 100K as we go into the end of this year and early into next year. Now, another important thing to note, okay, of course, it hasn't just been smooth sailing like a complete V-shaped recovery higher again here, and we absolutely weren't expecting that. I am still expecting this to be slow and steady until we get into Q4. And that would take us towards the end of September, early October. I think that is when we have the highest probability that things will start picking up once again. Now, if we add back on these moving averages, let me just change these ones up, and we're going to go 200 and we're going to go on to the 50. And you know what we're going to be seeing here was we had the Death Cross. So this being the first Death Cross that we'd had since September 2023. So a year ago. Okay, and we had that rally into the Death Cross on Thursday and that consolidation on Friday before getting a rejection. Now, when you have these moving averages like this, I don't place a huge amount of significance on the Death Cross thing in the same way as I don't place a huge amount of significance on these patterns like this broadening wedge that we're forming right now. But they do often give you, at the very least, a reaction and a basis for a bias moving forward. So of course we had that confluence there, all right, where we'd had that move up. We came straight into those moving averages. Now, regardless of whether this was a Death Cross or whether there were just moving averages there, the 50 and the 200 being very important ones that I do look for like overall cycle moves, it's unlikely that you're going to break through, clear those and continue higher on first attempt. So you came back into that 200 moving average, back into that 50 moving average, and have then since seen a rejection from that. Now, what has the rejection done? All right, very, very simple. Okay, we formed a gap on the daily time frame. What have we done this morning and over the weekend? We've come back in to fill that entire gap. Now move it down onto the 4 hour. That was also a really nice clean 4 hour gap. And what do we have there is we have this the 54 hour EMA coming back down. Okay, you had that break through it. You came into that moving average, the 200 on moving average on the 50 up here, rejected from it, now holding this as support. What we also have here, moving down onto those slightly lower time frames, you can see once again all these moving averages like work really, really quite well together, because of course the 200 on the 4 hour is going to be the same as the 50 on the daily. The 200 on the 1 hour is going to be the same as the 50 on the 4 hour. Okay, multiples of 4. And this is now what we're seeing here with this just consolidation and balance around that 200 hourly EMA. Okay, so you come into it, you chop around for a bit, you impulse up, fill a lot of the imbalance from the move down, you have this corrective move, and now it's finding this as support. So what I've done this morning, I did take a short position on Thursday last week. I scaled into that short position. I was underwater for a little bit, but I was confident of a pullback at the very least. And I've just used this as an opportunity to close out of those short positions now. And essentially mean that the longs that I have running from back here, okay, if we had that reaction from the Monday highs last week and I'd taken profit on those shorts, great. But now I'm just covering myself. Okay, I had a short position that was a little bit under, but now getting the opportunity to get out of those short positions. And I am expecting this to continue higher probably throughout the rest of this week. Now, that doesn't mean I'm expecting moves all the way back up to 69, 70K, for example, but I do believe we can come and test those previous week highs. And I think those are going to be really important levels on the chart here. So if we just turn off these moving averages, okay, we can see the support that it's holding, right? We had that New York Open where we had that nice move up on Thursday. That has come back, fully retraced, order block here, gaps here, consolidated, and I think if we're looking for a trade at this very moment, I would like to see this hold as support, and then we see a move back up to take those previous week highs that are all the way, well, actually they're not. Yeah, they are. They are, because we took out the Monday highs to take out those previous week highs at 62,800. Okay, so that's the main plan that I have. Now, if we are to lose the area of support that we have right now, all right, and that would mean, from my perspective, candle closes 4 hour, ideally, maybe even 1 hour candle closes below 57,500, taking you away and like losing the support of this bullish order block that we have down here. Then, all right, we do have an anchored VWAP from these lows that is a little bit lower, but I at that stage would be looking for that deeper retrace, probably around about the golden pocket. I'm not really thinking that we have a high probability of coming down and testing the lows down here, but by all means we could be coming back to test these wicks that we had from back in July. All right, and that would take us into that golden pocket zone. So overall on the chart, it is relatively simple for myself. Looking at those long positions right now, and that's consistent with Ethereum as well here, I believe. And I will cover the Ethereum charts as we finish this Bitcoin chart in the stream. But I do believe we can see a relatively slow and steady move up that takes us up to those previous week highs. Now, if we do lose this level, okay, then we are looking for a deeper retrace down, and that's maybe the time where I would look to hedge hedge those long positions in case of any carnage that we get that comes down and takes these lows. Now, from a news perspective, okay, it is quite a big week for news. We did have a more or less empty week last week. There was nothing really going on, and that was consistent with the actual price action that we had from the Nasdaq. There wasn't a huge amount that happened. It was very, very tight PA, as we can see as we went into the end of the week last week. Not a huge amount going on. Now, this week we do, of course, apologies for the screen going to go super bright right now, but we do have CPI on Wednesday. No, let's start that again. We do have PPI on Tuesday. That will be 1 hour before the New York Open. We do, of course, then have CPI on Wednesday, 1 hour before the New York Open. And then we've got core retail sales and unemployment on Thursday, 1 hour before the New York Open. So these 3 days are going to be significant. We are likely to see volatility on those days. And that's the day where we could be looking for those bigger moves. I think the Monday, it's a bank holiday in Japan. Of course, Japan's been quite a key player within the market recently. All right, the Asia sessions have been fairly volatile. The Japanese market itself has been very volatile. The yen has been very volatile. So a bank holiday there in Japan, which means that that's not going to be affecting the charts so much. But also, yeah, it being a Monday, the news being later on in the week, we would be looking for a relatively slow and steady day, I believe, today. A couple of other things, okay. Of course, UK has been in the news a lot, and we do have some news from the UK. So there's unemployment numbers coming out from the UK. We also have the CPI and the UK GDP that's coming out. So that could cause a little bit more volatility as well there. But mainly, okay, it is the US markets that run the world and that run a lot of the crypto price action. So it is these events, the PPI, CPI, retail sales and unemployment that we're looking at this week. If we have a look over here, the liquidation map's not really going to be telling us a whole lot, and that's kind of out of date anyway. The ETFs, there was a little bit of an outflow day on Friday. Okay, so a small outflow day on Friday after we had a decent inflow day on Thursday because there was a big move up on Thursday. It's relatively flat. Okay, there's not too much to be saying with the ETFs over there. From a order flow perspective, right, it's the same kind of thing that we've been seeing for a while. We can just turn this into a 30-minute time frame, and we're seeing overall, okay, since we've had those lows, it has been the spot bid that's been a little bit stronger than perps here. Perps got wrecked. All right, essentially we had a bit of a bull trap, a lot of a bull trap that was a couple of weeks ago. Then we had, of course, that massive move down, the huge capitulation. And since then, it's been very, very flat on perps. We've had these mini bullish CVD divergences playing out. Spot has been holding up relatively well. But overall, just a very, very calm sideways market here. There's not too much to be saying with the CVD. And of course, I've repeated this for a very long time, but it still is there. We do have a very, very significant spot premium right now. And historically speaking, the longer you have these spot premiums, the bigger the move out of it to the upside is going to be. You're not looking, it doesn't look likely that markets will top on these premiums. Okay, so we're not looking at this as being a big distribution event. I'm still very, very confident that we are in a reaccumulation and we are going to be seeing much, much, much higher prices as we go into the end of the year. And the length of time that we've been at this premium it would suggest to me that we're going to be seeing there's an appetite here for spot to be buying the asset. It's just perpetuals aren't playing catch up, but when they do start to catch up, that's when it can really get that big impulsive move higher. From EXO, the only other thing that I really want to cover here is the move down that we've seen today and over the weekend. All right, we haven't quite got there, but we've come very close to that naked point of control. So we were talking about this at the end of last week, that 57,400, 57,300 area being that POC that we had from Thursday. So Thursday being the big move up that we had last week that came into the Death Cross. We had this consolidation, a 3-day consolidation. Nice balance was found around that 60K zone. A bit of a move down, okay, opening outside of that previous day value area, outside of that weekend value area. A bit of a move down that comes in to test the high volume areas, the balance area from Thursday, and now we've subsequently seen a bounce. So if this does drop again, this is why I would want to see acceptance below that 57.5, 57.4 in order to confirm more of a bearish bias, because that does bring you into these imbalances, the single prints, and of course then we've got some liquidity, some poor lows down here that could be targeted. But if it does drop and we just tap into that volume point of control, that time point of control from back in Thursday, I think that would be absolutely fine. How that would look on a, always do that. How that would look on a candlestick chart is a little bit like this. You would essentially just come down, get the SFP off of our local lows, all right, that takes you into that point of control, and then you'd want to see a quick reclaim of that and then see higher prices to go and take out those previous week highs over there. So overall, I think that's really everything that I have to say. You can see again on this chart, so we've been looking on the spot chart mainly here, but this has been the recent price action that we've had. All right, we had that move up that took those Monday highs last week. The short position that I took and that I know many others took, this move down has given us the opportunity to get out of that. I'm not expecting a huge amount of profit from this anymore. We have that anchored VWAP holding a support below. We have this volume point of control here within this order block. So if there is to be one more move down, you would look for an SFP off of these Asia lows and then reclaim kind of that weekly level, the weekly open, for example, and then be looking over towards those new highs. If we are going to see closes below there and a rejection, then of course I think that can take us down towards that golden pocket, taking out these poor lows that we have over here, coming into the golden pocket area, and that's where I have alerts down here around about that 53, 52, 500. So yeah, for me, it's pretty straightforward. I've done 17 minutes of just repeating in different ways the same levels, essentially. And yeah, that's more or less what I am looking for. If we are going to see higher prices, we've got to get back above weekly open. It's been incredibly flat. It's been incredibly flat all day. You spike the lows, we've spiked the highs. So this London session has spiked lows and has spiked highs. We're now looking for a little bit of continuation in one direction or another. But we just have to wait and see where that ends up and then take the trades accordingly. So hopefully that's clear for everybody. Please do give the video a like, give it a thumbs up, subscribe if you've not done so already. Check out tauruscrypto.com if you'd like to find out more information about our community. And also, of course, a thank you to our sponsors for these videos. Blofin, a fantastic non-KYC exchange. So if you are looking to trade without the issues of KYC, then Blofin is the recommended exchange that I personally use. They have a really solid API, low fees, and of course they are giving a very juicy deposit bonus at the moment of 10%. And the more volume you trade, the more bonuses you can get. So you can get up to like $50,000 worth of free money just by trading on the exchange. So do check out the link in the description below. You also get a discount on your fees with that link in the description below as well. I'm going to wrap it up here. I'm going to continue on with my stream. I do stream more or less every morning, unless the markets haven't done anything. And I will see you in the next one. Cheers. Bye-bye.